Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bullish scenario where we're looking for a three-wave corrective structure to the downside in a regular flat where the common target for wave C is between the 1 and the 1.236 taken from the high to the low of A to the high of wave B. This gives us a target area between 59.7k and 56.6k, and you can see that the 1-to-1 here has been hit twice. The extension target is the 1.618 at 51.6k. Inside this wave C, we are then looking for a 5-wave structure to the downside, and the first structure that I like to show you is a finished diagonal where we have our wave 1, 2, 3, 4, and then eventually a wave 5, a 3-wave structure here in the end. The reason that we have to at least think about this structure now is because we have made 3 lower lows, and that fits with a diagonal, especially because the last move is also a zigzag structure, and in a ending diagonal you want all of the waves to be 3-wave structures either to the upside or the downside. So in this case, we are then looking for a 3-wave move in this wave 1, where this wave C and then a wave A, B, C hit the 1.618, which is a target for wave C. We then have a 3-wave move to the upside in a wave 2, which is more complex. Simple ABC to the downside in wave 3, ABC up in 4 and ABC down in a wave 5. This wave 3 is a little bit short compared to wave 1, as wave 1 is quite big in size, just missed out on the 0.618, which is a common target for wave 3. The 0.5 is a common target for wave 2, and the 0.618 for wave 5 is a target as well. This trend-based fib extension is taken from the high to the low of 1 to the high of 2. This one here for wave 5 is taken from the high of 2 to the low of 3 to the high of 4. And then you have the 0.5 fib taken from the high to the low of wave 1. Now what is good to see in a wave C, and especially once we're ending a wave C, is that we want to see volume moving to the downside. So in this case, we have lower lows, but you can see that volume is moving to the downside each time. And that is also what we like to see if we think about the bullish ABC regular flat scenario, as we're looking for price to move towards the upside. Now this diagonal here is now invalidated, but I do like to say why. So here we have a wave 1, 2, 3, 4, and then we are looking for a wave 5 to the downside, with wave 5 by itself being a diagonal. The reason it is invalidated, as price has now moved above this wave 2 after moving below wave 1, and that is not allowed. The moment you go below wave 1, it has to be a wave 3, and therefore you have to be looking for a wave 4, but wave 4 is not allowed to go above wave 2 in a diagonal. There was the possibility for maybe a double zigzag in this wave 3, for this being a first one in a wave W, then a wave X and a wave Y to the downside, but once we hit the 0.7 Fibonacci over here, the probabilities for a double zigzag in a WXY reduced, and therefore probabilities increased to take this high towards the upside. So if we then look at an alternative bearish scenario, we have to look at a continuation of this wave 4 in a bigger impulse towards the downside. So here we have our wave 1, 2, 3, 4, and then a wave of 5, and in this wave 4 we are then looking for a sideways double combo in a WXY, where wave Y is a wave A, wave B, and then a wave C towards the upside. 1, 2, 3, 4, 5 wave structure. You don't want to hit the invalidation. The official invalidation actually is the 0.618 here, sitting at 67.3k, taken from the high of 2 to the low of this wave 3. In this scenario, wave W then has to be a zigzag to the upside. Wave X is also a zigzag with then a flat in wave Y. It's not a great zigzag in wave W, but in this particular scenario we have to think about a zigzag in W till invalidation is hit, of course. Now inside this wave Y, you're then looking for that A, B, C, and if you then take a trend-based fib extension from the low of X to the high of your A to the low of your wave B, and you toggle on the wave C target area, then the minimum target area is the 1.236 to the 1.38 here, and you can also take a fib from the high to the low here, and then toggle on the 1.618, and therefore you get your most common target area, which is actually between the two 1.618s. But as you can see, that's pretty much on top of the invalidation, right? So preferably in this scenario, you want to see price turn around here. That does mean that in this wave Y for an ABC, we're still looking for a sideways range in a wave 4, 1, 2, 3, 4, 5, because a wave A is a 3 wave, B is a 3 wave, and then a 5 wave is C towards the upside. So you need to first wait for a range to form as long as price is pumping. The most bearish scenario is that we have a bigger impulse to the downside, a wave 1, 2, and then a big wave 3 to the downside. Lower probability because this wave 2 touched the 886, taken from the high to the low of wave 1, which is a rare target for 2, common target for a wave B, and also common target for a wave X. So that increases probabilities. This move to the downside is a wave C or a wave Y, and that in turn increases probabilities to move towards the upside at a later stage. So if we then talk about the probabilities of the different scenarios, then on the higher time frame, on the weekly and the daily time frame, we are looking at this range as a corrective structure, increasing the probabilities. We're going to be looking for these highs at 74k sooner or later. And locally, on the 4-hour time frame now, or the 15-minute actually, the probabilities are higher to move towards the upside. Price is pumping, so what we always have to do from an Elliott Wave point of view is simply wait for a range, because even in the bearish scenario, where this is a W, X, and then a wave Y, you want to see a 1, 2, 3, 4, 5 wave structure. At the moment, you only have your 1, 2, 3. So even locally, you would need to wait for a range to form, then one more high, and then potentially move to the downside in wave 5. And if price continues and hits the invalidation, well, we get a little bit more clarity, no? I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.